I want to go into this trade, I'm going to draw my major points over here. So for me, I'm a trend line trader. I trade with every aspect, but I like trading with trend lines because trend lines is the appropriate way to trade. And also the market respects trend lines, because if a momentum for an uptrend is high or a momentum for a downtrend is high, the market is going to follow that momentum. So I use trend line to trade because it respects it a lot. So for this market, I'll draw my major point over here, or I can start it from this place and draw it to this end. After drawing this major points, now you are going to see the places where the market returned, the places where the market returned or it backed off. So the first major point is this. The first major point is this place, because the reason why it's a major point is that the market the market bounced from this place, telling you this first area is a major point. The same way to this place, because this was a fresh zone, and it's from this side, it retraced to this side. It retraced to this side and bounced back to this place. The reason why this pullback was higher, maybe you should know the reason. Sometimes the big boys at the market, they carry the market to wherever they want. So if your stop loss will be at this place for this entry, meaning you are going to be out from the market. But don't worry that you will be out from the market. Just wait. So if I was out from this side, out, and there was another rally over here, I will not enter this market because I don't know the situation of this market once I was out from the market. Sorry. I was out from the market. Once I'm out for the market, I'm going to wait for the pullback again. So if there is a pullback, I can see there is a pullback over here. But now, because the big boys in the market push the market to this side, I'm not going to set my stop loss over here. Concerning your capital, you're not going to put the stop loss over here again, because already the big man has pushed the market down. So you are going to use their way down as your stop loss. So calculate this place to this place. It's a very huge stop loss. So this is what you are going to do. You are going to enter one trade over here and enter another trade over here. And your target should be at this level, because already this really was this one was a reversal to this one. This was a reversal to the first zone. It wasn't a fresh zone, but because of this, it is a fresh zone. So if it is a reversal, meaning if a retest market from this side and retest this zone, this particular two zones, the market is going to bounce again. So all you need to make your let me say calculate your capital to how you are going to rate. Like you are having $2. Let me say let me say you're having $10 as your initial capital, and you are risking maybe um, you are risking $2 from your initial capital. So you wait if the market bounce back from the zone that you enter. So meaning you are not going to do early entry from this market. You just wait for the market to come to your zone before you enter. Don't do early entries because the market is not for you. Whilst you don't own the market doesn't own you. Wait patiently for the market to come to your zone. As I have drawn this one, like I really know if the market bounce to my zone, I'm going to push myself in the market because this is telling you a real directions from the market. So after making this analysis, then you go to the smaller time frame. You go to the smaller time frame. The same things that the market is applying over here, is the same thing it is applying at the smaller time frame. Is anybody having a question before I
So
continue?
which time frame is this?
Please,
Hello?
the question again.
Which time frame is this where you're doing the analysis? This one.
This is 1 hour, but I took my analysis from 4 hours before I am using the 1 hour to explain. I hope I'm clear.
Yes. Understand.
Yes,
Okay.
you are clear.
Okay. So if I want to enter, let me take this yesterday's for instance. This was the place that the market show a reversal, but I waited for the market to push small, so the entry was here. The reason was that not every day that the market or your trend touches and it will give you a reversal. No, sometimes it can make a support. If it's a downtrend, can make a support before the market reverses. So you see, if this is a support area, right, and another support area will be at this place. So I could enter the trade from this place. But the reason why I gave the trade over here is that we have something we call um, head and shoulder, head and shoulder. And not every day that you are going to get a clear head and shoulder. Let me use 15 minutes to make this clear before you understand this. The same thing the reason why I use this to enter the trade. This is a head and shoulder, a slided head and shoulder. Let me, please. This is a slided head and shoulder. One head, another head over here. And this is the main head. So not every day that you are going to get one big head and the other head will be here and the other head will be here, giving you a very nice head and shoulder. No, sometimes you can get the big head over here or the head over here, and one head will be at this place, and then other one at this place. For me, I call it a slided head and shoulder. Not every day you are going to get it in line. Sometimes the head and the shoulder wouldn't be at the same line. It will be a slided. The candlesticks over this place respected this one, but we are not dealing with candlesticks for now. We are dealing with how to enter trades. So for you to get everything right, and you want to, I mean, get yourself not penalizing from the market. After you draw this major points, you just wait. Like you see how the market is doing. You just wait for the market to touch your major points. Don't be in a haste to go into the market. Let the market come into your zone. After the market come into your zone, now compare your account. Like I'm going to risk maybe 4, 5, 3, 2, 1, 6, 7, 10, or anything that you can afford to lose from the market. Don't just go into the market without calculating your risk to reward ratio. You will tackle that one along the time. So you just calculate, if I'm going to risk about maybe $10 and my account is $100. So I will calculate from this particular place, or this particular place, or this particular place to this place. If it is going to give me maybe 10 to $15, or $1 or $2, then I'll know how to risk over there. Or I suggest, after drawing this major points, you can use another trend line to assess your stop loss. You can also do another trend line below your major points. So if the market bounce from this place to where you drew your where you want to set your stop loss, then you move from the market. Don't say your analysis are good, you are the person who is mentoring you, the person who is giving you clue is good, so you are not going to move from the market. You are just going to stay in the market, and brother, before you realize, then everything will be gone. So make a target for yourself. The reason why I always advise people on how to trade for themselves, or to get price action, is that if you are a price action trader, you will know how to calculate your risk to reward. You don't just come into the market. You have to take time, make the analysis look beautiful to you and understandable to you, that you can trade with this before you go into the market. Or don't just say somebody is very good, a person has been making a series of consistency in the market. So if the person sends you signal, you are just going to take the signal, not maybe calculating how you should go with that signal. You just go into the market and be trading. No, you are not going to be a profitable trader, or you are not going to win more and more. You are just going to be dedicating your money to the brokers, because you don't calculate your risk to reward ratio. And also, sometimes I choose not to use stop loss. This is because if this is a whole trend, this is a whole trend, and I'm taking a trade from this side or this side. If I calculate this zone or this place, let me take this one from this side to this side. If I calculate, then I'm going to like I can afford to lose that money, I'll just hold my trade. And if the trade touches the support area, this area, I mean the support, the fresh support area, meaning I have to place another entry over here. So if by the will of the market your trade um, executes from this side and move out, you are going to go. But if you took this trade from this side to this place, it is going to give you a very huge profit. So the market is decisive if only all the analysis or all the touches that you are creating is valid. The market can be successful, or any trade that you pick can be successful if only the analysis or your zones that you chose is very valid. Then you are going to be successful in any entry that you make. But if like you don't really understand what you yourself you're doing, meaning the courage and psychologically how you are going to place the trade will be even difficult for you to do so, because you yourself you don't even understand what you are doing, and you don't even know what you're doing. So psychologically you are not comfortable with the market. But if you are comfortable and also having a like confidence that the market is going to go your direction, you have to make your mind before you place a trade. Don't just go into the market and place any trade. Get yourself comfortable and make the good analysis that you understand. Because at a normal circumstances or at a normal price action trading, if I see this as a one point over here and another one also over here, meaning the third one is going to be rejected, no matter how stop loss hands comes, like it can hunt your stop loss by this way, then the market rejects. But not every day that you are going to get a very lined market, or you are going to get a particular place which the market is going to go through, or at the right time now, then the market start to go to your direction. No, sometimes the market have to decide for itself how to move before everything is done. Please, I hope I'm clear. If anybody is having a question, you can unmute yourself and ask.
Okay. Like for this trade, right? And like for this crash 500 that we have right now on the screen.
Yeah,
So it's right. Since we're using the 15 minutes time frame to analyze,
yeah,
what's going to be the take profit? The take profit, are we going to anticipate that it's going to break the upper trend line? Because we are expecting that we were supposed to buy when it touches our lower trend line here,
yeah,
the one you just drew here.
yeah.
So is it that when we are buying right now, our take profit will it be at the upper trend line, or is we are anticipating that it has to break up till the first zone here by the left on the chart? That is after it has broken the upper trend line.
Okay, okay, okay. So this trade, like as you pick a trade from this side, don't wait for the market to touch this level before so you move from the market. This is indicating you from this side, from this place to this place. And let me see, this is a peanut, a peanut. Like you can get something like this. Let me use as an example. Something like this. Like it is indicating you that if the market breaks this side, going to go up, and if it breaks this side, it's going to go down. But for this place, there's no fresh zone over there. This may be a fresh zone, but it's not a fresh zone because already the market is an uptrending. So this might not be a fresh zone because already the market is an uptrending market. And also this place is a fresh zone, meaning if the market breaks the zone over here, please, I'm coming. If the market breaks this side to this side, it's going to react. It is going to react because the zone over here is very strong to contain this one. So you are not just going to wait for the market to touch this place. That's why I said if I'm entering a trade from this side and my stop loss might be at this place. So your take profit should be 1/3 of the stop loss. So your take profit might be around. So if you calculate 1, 2, so from this side, this will be your first take profit, second take profit. So you get 1:2. But if it breaks this place, yesterday I told you you can enter with 2 positions and take your first take profit, then you move out from the market and you wait for the the second take profit. But remember to lock your profit from this side so that if the market doesn't go to your direction and bounce back, it will take you from the market with small profit that you get in addition to the one you first took from the market. So meaning you are not going to be losing more from the market, or the profit that you had at the previous time will not be all uh, regained for the brokers. You will get some of the profit and you will be out from the market. Remember, I said you don't own the market, either the market owns you. So don't worry yourself to anytime or every day go into the market without you making something from the market, or if you go into the market you want to every day get profit. No, the motive of the brokers is not for you to every day get profit, but sometimes we the retail traders, we have to go with the big men or the big institutions, how they trade and get hours from the market, then we move from the market. Let me say I'm having let's take this place as instance. I'm having maybe $1,000 and I took a trade from here. I can set my stop loss to this place and make this N first TP, second, and my third TP. So calculate this place to this N, meaning you are going to get a lot of profit from the market, but you are not going to hold all the positions to where you targeted. You're going to close some position around the line or across the line when the trade is running. You're going to close some positions before you are TP triggers. So not every day that you have to wait for your profit to be ready. Sometimes you have to get what you want and you move from the market. I hope your question is answered.
Yes, yes. So now for this trade now, yes, for this trade now, we have to wait until it breaches our trend line, I guess. For this trade, for us to take this trade, we have to wait for it to breach the trend line. So now is it that what candlestick confirmation are we going to see now if it touches once it, because this is boom and crash. It moves in two direction. We don't see it's very rare before we start seeing all these candlestick rejections. Like if you look at the past, you just see few that we see had candlestick rejections. Other ones you just touched, then it started going back up. So what confirmation are we going to get that okay, it is time for us to take our trade?
Okay, okay. Let me use 1,000. Or let me use the same pair to explain. Like concerning about this boom and crash, sometimes it doesn't respect when you are trading against spikes. It doesn't respect stop losses. But if you are trading for spikes, it respects stop losses. But if you are trading against spikes, it doesn't respect stop losses. All because the spikes that are being created on the market is very volatile. If it spikes, that's the move. Its purpose is to spikes, not to go other way. It's to spike. So if it spikes down, and if it is price 500, it spikes down, meaning there's any spike can occur. But if you are trading for spikes, I can I can set my entry here and leave my stop loss over here, because if the market breaks this place and touch, it will take me from the market and it will not spikes. So this one will take you from the market peacefully. But this one, if you take a trade over here and there's a huge spikes, like it spikes, boom, it can be at this place. And if you are stop loss, let me say it can be at this place. And if you are stop loss, as I said, your stop loss is here. Meaning it is going to take not only the stop loss, but some of the capital is going to be lost from this side, because the the the, the spike that came is very massive and huge. It's going to take you from the market from this side. But because your stop loss was tightly set over here, it's going to break it because you are trading against spikes. But if you are trading for spikes, it is not going to break its rule. It will go straight away and take you from the market, but not losing much or higher than where you lose over here. So some people are not interested in trading against spikes. As you said, if a candlestick that you can, I mean, look through before you enter this trade. Like sometimes some candlesticks, let me say, you see the example that I was making. That is the same thing happening over here. Sometimes, like if you trade currency, let's take Euro USD for the last, just yesterday, Friday, a news came for the buyers to take place. But if you go to the charts and see how the chart is, the current momentum of the market was a downtrending market. But the news came and it took the market, boom, an uptrend. This is giving you a significant that the market deals with news, but this synthetic doesn't deals with news. It has its own directions, or it has its own way of behaving to the market. The currencies, it deals with news. A news can come and the volatility of the market can be huge. So if you are trading with currencies, you have to be careful on the pairs that you trade. But for the boom crash, there is no news concerning them. I hope the question is being answered.
Yes. Yeah, we understand you. Thank you very much. Thank you. So from okay, from what has happened right now, from this analysis on crash 500 now, that means the trade we cannot take this kind of trade right now. We have to wait until we see how the candlestick ends, Abby.
Yes, yes. You have to wait and see how the candlestick reacts, because the probability of breaking is high. Because yesterday I told you, the more the touches trend, the higher
The weaker the
the
yes.
sorry, the weaker the trend becomes. So you have to wait because 1, 2, 3 is now for the market to break. And you see, this place 1, 2, 3. So this just now the market can be indecisive. But if you use peanuts, like okay, sorry, if you use something like peanuts, it will be like this. So you wait for the market. If it breaks this place, it will come to retest at this end and comes back. So this fresh zone will be your target for the entry. But this place it will break and back. But if in case the market decides to go up and breaks this end, it will go and retest and boom.
Okay. Okay. So that means that this zone that we are standing on right now, this zone we are standing on right now is not our entry zone at all. We just have to wait for these two things to happen.
Yes, you just have to wait. You have to wait if the market pull to this place and you see a retest over here. But if it pulls and comes straight away to this zone, you can buy.
Okay. Okay.
I hope it's clear. Any question?
Yes, sir. Can you hear me?
Yeah, I can hear you.
Okay. My question is, how do you understand the behavior of crash synthetics in general? Sometimes the behavior used to be a little bit complicated, unlike the currencies. So how do we understand the behavior?
Yeah. How do you understand the behavior of the
Market.
either currency or synthetics?
Yeah, synthetics in particular.
Okay, so like the market doesn't behave one way. Like every pair has its own way of behaving. You understand?
Yes, I can hear you.
So like let me see. Volatility volatility has its own way of behaving, and boom and crash, boom has its own way of behaving, and crash is having its own way of behaving. And we consider our volatility to a way of oh 10 1x, 25 1x, 50 1x, 75 1x, 100 1x, 150 1x, 200, 300 has its own way of behaving. And a pair like jump too
Yes.
has its own way of behaving. So any pair or every pair has its own way of behaving. Jump spikes, but doesn't spikes like the way boom and crash spikes. So every pair has its own way. So if you are a beginner, you want to know the behavior of the pairs. You just take a pair, then study it for maybe 1 month or 2 weeks to know how the pair behaves. And you can use H4 to adjust the behavior of the pairs, because in H4 you see everything clearly from there. So before you can make any analysis, you have to know the behavior of the pairs before you can make any analysis.
Bless you.
Let me say something. nobody is having any question, then so this is H4 for boom 4. So already on H4, the market is an uptrending market. So I'm not in a hurry to take any trade from this side or this side. I'm not ready to take any. I'm waiting for this because there's a clear or a very nice zone over here, this place too. So I'm waiting for the market to touch this place. Then I'll go in. If I'm going in for this market, I'll go huge because that's the right place for the market to take a retracement or the market have
Okay,
to
that's the boom 500.
yes, that's the right place for the market to make a rejection. I hope I'm clear.
Yes, sir. Thank you.
And this is boom 300.
Okay, that's boom 300.
Yes, so you are waiting. You are waiting. And this is H4 time frame. H4 time frame. And you see a series of trends over here.
So let's say sorry, for some of us who are a bit busy, let's say a bit busy, is it possible for us to set, like, let's say a sell order, like a sell order in case of any time the market gets to that level that maybe we're anticipating for it to take? And for example, now all these positions you have already given to us right now, and we're anticipating that these positions we're going to meet these positions. Is it possible for maybe for a sell order to be established?
Yeah, like you
A
can
sell or a buy order.
see the market can come to this side and bounce back. So if I'm to place a trade over here, maybe the market can stack over here and bounce back. And maybe I was thinking the market will go right away from this side. No, because you can also get a trend over here. So I use this one. All you need to understand the price action, because if you do this, market comes and hits at this place, it will sell. But that one will be a scalping sell because it won't be like the major zone as this place. I hope if I'm clear,
Okay, it won't be like a major zone. Like which place? Like which place?
this 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 sorry.
Okay. But the trend line that you have drawn, that's the major zone, I guess.
Yes, I am going to the major zone, meaning if the market touches this place, it has to reject. But if in case it doesn't touch this and touch here, you can go in for a sell. But that one will be a scalping.
Okay.
But if it touches
Okay.
the third level, that one you can go in with confidence because this was the second touch, first touch. You have, or you can confidentially say the market has to reject because it rejected over here because of this place. I hope there's no more question. I want us to wait when it is 11:30, then we come for the link. So now those who want to join the contest, like after the call, you can chat me privately so that I'll add you to the page that we are going to do the analysis together.
Sorry, sir. Can you
Okay.
explain on